Going to give you the summary of this book and the notes which I have prepared from this book, which are the gist or the some two liners, three liners from this book, which is very important in our trading journey, Trading in the Zone by Mark Douglas. You may not be able to read this book because of the time constraint, so I have brought you this very short and crisp summary of the book. So the book says these 5 points in a summary. If I have made these notes and I have read these books twice, and whatever I have understood, I will try to convey that knowledge to you. So, Trading in the Zone books says that apply these 5 principles in your trading journey. Always think about them whenever you are taking a trade. The first thing is that book says is to start thinking that anything can happen. What does this mean? Before taking any trade, you try to think once that anything can happen. Means this stock, whatever you are purchasing, can go down also. The call option which you are purchasing can go down also. What will you do in that position? Are you ready for that? Have you analyzed the risk? If you have not, why you are taking this trade? Do you have the exit plan? So these all things come in your mind when you will start thinking anything can happen. Generally, whenever we are taking a trade, we are thinking only positive result. We are thinking that we are going to gain only. But when that stocks will start falling, we will be afraid, we will be fearful, and we don't have any exit plan. The loss will be 10%, 20%, 30%. Then we will ask some people that what I should do, whether I should hold. If they will tell you you should hold, we will be happy and we will be holding. If they will tell you sell and exit, we will ignore that guy and we will jump to the next guy, because we don't want to listen that you exit. Nobody wants to exit in loss. This is why option buying will give you maximum loss, because option buying, what happens is people will buy in like greed. So they will entire capital will be deployed with a single expiry option. But when that prices will start falling like anything, we will be paralyzed. Our hands will be shivering. We will not be able to think. So trading success is dependent upon whether you have a plan before taking the trade. That will come when you will start this simple one liner, anything can happen. So this line you stick to your trading, wherever you are doing trading, that desk or in mobile also, you take a small piece of paper, write anything can happen and stick on that screen somewhere bottom. Already the screen is very small, but you can stick it. But when you will start thinking this, anything can happen. Oh, I should not take this much big position. I should not invest in this. I should put this much capital only. I'm not telling you to be fearful, but at least you will start analyzing the risk, that what is the risk, where is your stop loss, and whether you are going to exit. So that all things will come in mind when you will one time you will think that anything can happen. And anything can happen. You know the trading today, you are suppose you have taken a long position at the 11 a.m. of market, and you have taken a trade for 2 hours. Suppose that time itself some news will come that Indian some big neta type of person has died or killed. Market will fall like anything. Market is falling suppose, and you have taken a put option for some reason, some Israel and Gaza, that war, and suddenly one news will come that that war is stopped. Your market will fly like anything. So anything can happen. Nothing is in your control. There are many factors working in market. So you don't know all the things. Accept it and go ahead. If you are taking a trade or investment, first thing is you should be asking yourself that for how long I am going to keep this, 10 years, 5 years, 5 months, 5 hours, 5 minutes. Then what is my exit plan? What if this goes wrong? Where I have to exit? If I have to put more money or I have to exit? These all things you should plan. So first thing is this book teaches you is anything can happen. Second thing, you don't need to know what is going to happen next in order to make money. This is very complicating issue. People will think that this is wrong, but this is right. Trust me. You don't need to know what is going to happen in the market next in order to make money. Then you will tell how I will take trade. So when you are taking trade also, you don't know that whatever you are thinking is going to happen for sure. That is only a probability. Market works in probabilities. So when you are taking a trade, you have some percentage probability, maybe higher side, but not sure. It can be opposite also. But if you are trading or investing in a planned way, like every time you are doing the same thing with the same setup where your risk is limited and your rewards are more than your risk, then you are ultimately going to earn in the market, no matter market goes where it goes, down or top. There are many people who are selling both call and put, simply putting some stop loss. Don't matter where market will go, they will earn more than you. There are many people, they have a system. That system they will apply in all the markets. No matter market is going where, they are also going to earn more than us. Then suppose I have a plan that I will buy some value investing stocks and I will keep them for 10 years. No matter market is going down or top, I don't want. I have my plan. I know these stocks. I have a stop loss. I know that where I have to exit, in which stocks I have to put more money. That is my plan. If it is going up, I have a plan. If it is going down, I have a plan. Now market, let the market do up down up down. That is not irrelevant. You need not to know from here itself market will go up. Suppose now you will ask me how a option buyer will earn if he don't know whether market is going up or not. Okay, I have a plan that always whenever bull flag will be formed, suppose this is my simple system, whenever bull flag will be formed in any stock or in an index, suppose this is my plan. Intraday my plan is 5-minute chart. I will see this, and if this breakout happens, here I will buy. This is my stop loss, and uh, I will see this is my entry point, and my risk reward is 1 is to 2. Suppose this is my profit booking point, so I immediately my profit line is here, my entry line is here, this is my stop loss. Now do I need to know where market will go, what market is going to do? If I will involve in now too many things, like I should see RSI also, I should see moving average also, I should see what Dow Jones is doing, now I should see what other investors are doing, what news is telling, then I cannot take the trade. I'll be so fearful that I will not be able to take the trade. Price will reach here and I will be thinking only. If I have made the system of only this bull flag, here the breakout, then I must take trade every time I must take trade entry here, and this is my stop loss. No matter if it goes here, failed means I will be out. If it goes here, I will be exiting, no matter it is going in the space anywhere. This is my system, so I must follow my system. Every time I will make money. I trust the system, I will make money. Very simple systems also. 9:15 candle, if break, I will take the trade in this direction, no matter it comes and hit my stop loss. Every time it will not do. So you need not to know what market is going to do next in order to make money. This is the second learning. Third is, there is a random distribution between wins and losses for any set of variable that define an edge. What is this? Suppose I have made this system, this bull flag pattern, and I have back tested, I have seen that this system works. Whenever price will give a breakout here, and if I will take entry at this point, stop loss at this, and 1 is to 2 my target price. Suppose this is target price and this is my edge. I know this will work 65% of the time. Suppose I have seen this, back tested this, I know this will work 65% of the times. Remaining 35% of the time my stop loss will be hit. This is suppose my edge. My edge is like it, more times it will work, and whenever it works I am taking 1 is to 2 minimum risk to reward. Okay, so I have an edge, because whenever I am winning, I am taking more profit than whatever I am losing. So I have a system with an edge. But I don't know if I take suppose 3 trades, suppose 5 trades I will take, and 10 trades, suppose 10 trades I will take, 3 4 5 6 7 8 9 10. I don't know which of these 6 or 7 trades are the winners. I cannot say that first 7 will be the winner and these 3 will be the loser. There can be this will be the winner, this will be the loser, then loser, then loser, then again this all will may be the winner. I don't know the distribution of the win and losses in my system. I have to do that for more number of times. Then only the probability will work. Understood? So if you have taken or started some system and this will give you 2 times losses and you will stop doing that in thinking that this system doesn't work, that is not correct. You have to back test it. If you don't want to apply money, you do it without money and see whether the system is working or not. Once you trusted the system, apply the money and do it for the long time, for the long number of trade, so that your this edge will perform. Otherwise there is no correct distribution that first will be winner, second will be winner, third will be loser, then again same pattern will not repeat. This you have to understood. There is a random distribution. So I can, if I know with my relative strength system, whatever I teached in my YouTube video, swing trading system, I know that more than 60-70% time I am right. Whenever I am right, my profit is 1 is to 4, 1 is to 5 also. When I am wrong, I am losing very small amount. So I will put without any thinking, without any second thought. If that second thought will start coming in my mind, I will not able to take the trade. I will be paralyzed. So these things will work you to take the trade fear without fear, and you can exit also without fear. If RS line is going below that 0, I can easily exit because I know if I follow this system, I will be profitable. Okay. Now next thing is, an edge is nothing more than an indication of a higher probability of one thing happening over other. If you have an edge, suppose first 15 minutes candle breakout, I am taking the trade. This is my system. Suppose that if this break out this side, I will take a trade on the top side. If it breaks down from bottom, I will take down from the, this is my edge I have made. Like I know this system will work more the time it will not work, and I will gain 1 is to 2 profit. But this is just an indication of a higher probability, higher chances. God has not come and told this will happen, this is going to happen, this is sure. No, this is just, it was a probability. When you start thinking in probabilities, you will start thinking your risk also, that this has some percentage probability. So suppose I am taking a trade here, and if it reverses, if it doesn't go in my way, what I have to do, where I have to exit, that should be my risk plan. Suppose RS line goes above 0, I have explained you that RS 55 will go above 0, you take a swing trade. Okay, you have taken. Now if you will feel like that I will be sitting if it goes 0 or below 0 also, because it has to go up no matter what. No, this is just an probability that this was stronger than market, so it should perform better than market, it should go up only. But if it is going down, you have to accept it that this is the market. Every edge has an probability only of one thing happening more than other. But if it doesn't happen also, I have to accept and take the loss. This mindset you should make. Okay. Last is, every movement in the market is unique. Suppose you have seen yesterday in Nifty that Nifty made a 2 times low, and then when it crossed this high, it given you a massive rally of like 500 points. Now after some 7-8 days, again this thing happened to you, and you have taken here a call option by thinking that again this hero zero trade will be there, and my this 2 rupees call will become 200. Okay, and you have applied your all capital, 1 lakh capital, by thinking that same thing will happen, and you have taken a huge risk without thinking a moment that every movement in the market is unique. This same chart pattern is not the same as that 7-day earlier wala chart pattern, because the people involved in this chart pattern, the traders involved in this chart pattern currently are different than those who are trading that day. So if traders are different, their psychology is different, you don't know where they will book profit, whether this is a trap, this will come down. You have unnecessarily taken a huge risk. Okay, so always take care of the risk. every movement in the market is unique. There is just story in this book where a big trading firm owner comes to a new guy who was very good in technical analysis. He is doing something in his computer. The owner comes and asks him what you are doing. He is doing some soybean chart analysis. Soybean is a commodity which is traded in America. So that guy told that, sir, we should take a long side position in soybean when the soybean will hit the bottom of this level. With my analysis, today soybean will hit this level, and from here onwards the rally will start. So when the price will reach this level, this is our buy point, we should buy here. Then that owner of the trading firm asked that why with this much conviction you thinks that we should apply all our capital at this point without thinking about risk, and it will go higher only. Then this guy tells that here that Fibonacci support is there, or some big support is there, weekly support is there, 200-day moving average is there, or whatever is there, everything is there. Then that owner tells, okay, we'll see. Then when the price reaches here, this point when it reaches, that owner tells their firms to sell all the soybean stocks whatever they are having. Then that new guy is afraid. He's telling, sir, I was telling to buy, you are selling, you have heard me wrong, you have interpreted me wrong, I am in bullish view. Then that owner tells you, wait and watch, that soybean breaks this level and goes like this. Now the owner tells that a single trader like me or a small firm business owner can do this, can break these levels, then anyone can do. So you should always think of risk first, that nothing is sure in the market. All things are probability only. If it is going up, that is a higher probability of one thing happening over other. But you should always put that other part in mind, that there are many traders, only one trader is required to change the market view, to change the patterns. That one trader, you don't know where he is working and what he's thinking. That earlier pattern, whatever was formed, that time traders were different, people were different, and if one people will think differently, the result will be different this time. So these are the 5 things you should always think about. Now when you adopt these 5 truths, now whatever I have written, I'll tell you, and I'll try to explain you also wherever required. Now when you adopt these 5 truths, your expectation will always be in line with the psychological realities of market. Now you will understand that these are the realities of market works like this only. And whatever your expectation, like my 2 rupee call option will become 500, that will be in limit only. You will always feel like this can go to zero. Whatever stocks you are purchasing can go down also. So your expectation will not be like I will be winning only. You will always think about losing also, that you can lose. So your expectation will be in line with the realities, first thing. Now what will happen if your expectation are with your reality? With appropriate expectation, now your expectation are appropriate, that I can lose also, you will eliminate your potential to define and interpret market information as either painful or threatening. What does this mean? Suppose you have interpreted that market will go from here to the higher, and you have taken a call option. Now if you have taken a call option and market starts going down, breaking this low, I have seen, and you will also feel this, you will be threatened. Your body will be shivering, that I am in loss, it should go up, what I will do, what should I do? You will be panicking, you may be paralyzed also. So that is the situation. Market has not threatened you, it is doing his duty, it is showing the normal candle. This same candle will be a positive vibes for some other people, but you are threatened. You are seeing SGX or gift nifty in the evening, and you are threatened that market is going up, I have taken a put option, I have bought a heavy put option quantity, what should I do? Market is not threatening you, your expectations are threatening you. If your expectation are in line with market, you know that market can fall also, you will not buy a huge quantity, or you will not buy simply for all your capital. You will buy the amount which is just appropriate with your risk. You can sleep quietly. In current market also, you are comfortable with exiting, you are comfortable with booking your losses, so that will not be painful or threatening. Now what this will help, if the market information is not painful, not threatening, how it will help you? It will help you, thereby you effectively neutralize the emotional risk of trading. Your emotional risk means whatever uh, mistakes you are doing because of your emotional risk. You suppose you will not cut your losses because of that emotions, and the idea is to create a carefree state of mind that completely accept the fact that there are always unknown forces operating in the market. You will always feel that you don't know everything about what is going on in market. Just because your candle has broken this low doesn't mean that this cannot go up. There are many traders, you know, only one trader is required who can take the price up. So you will always careful about your risk, you will manage your risk, and you will see whatever is going on. You will not interpret that this can happen, that can happen. Whatever will be happening now, you will see that thing only, because you don't have any threat or any fear that this should happen. When you start expecting something, then you don't want to see that other thing what is happening. Suppose market is falling, but you don't want to see the market fall, so you will feel okay, this is temporary fall, it will reverse from here. Okay, this is Fibonacci retracement, it will reverse from here. Everywhere you will see that it should go up only, because that will feel you good, and your mind is very dirty. It will make your body feel like it should be always comfortable, cool, all is well, all is well. But it is not well, it is going down. You have to see. How you will see? When you will start seeing market in a neutral direction, no bias. It should go up or down, everywhere I am comfortable. If it is going against me, I am comfortable, I have a plan for that. When you start looking like that, you will see the candle will start talking to you, the price action will start talking to you. Understand? More filmy, but that's the truth. So that will be the carefree state of mind, and that's why the book name is Trading in the Zone. This is the zone that people, this book tells that when these Olympic players, when they go for that big championships like Olympic and all, they should be in their zone. Like Virat Kohli, you have seen in that Pakistan match of T20, he was in the zone, so that sixes were coming like anything, flow. When he is not in the zone, you have seen him uh, out with a duck for many times. So like sports persons are, when they are in the zone, they are like their game will entirely change. Same way, when you are doing the trading and you wants to come in that zone where price will start talking to you, you have to be carefree mind. Like, you should not be biased, like I have bought the call option, so it market has to go up. No, you are ready for market going down also. How you can be ready? By managing your risk. You are already planned for your downward direction also. So you are, when you are ready now, you will start seeing, okay, market is going down, I have to exit, I have to take that bottom position, I can buy the put option. You will earn in that direction. But many of you might have faced this, that you are seeing the market going against you, but you cannot do anything because you are paralyzed. Your mind will tell, okay, this is clearly going down, cheta, do something, take some your exit and take the reverse position, but you cannot do because you are fearful. What if again it reversed? So that carefree state of mind will come when you will understand these five truths, you will accept these realities, and your expectation will be in line with the market realities. When you make this truth a fully functional part of your belief system is very difficult to change. If I believe that Modi ji is good, then that is my belief, nobody can change. If I believe Rahul Gandhi is good, that is my belief, nobody can change. These beliefs are very strong. Religion is a, have many belief, you cannot change that beliefs. Like that, if you include these things in your belief system, that these are the truth of market, that everything has a probability only, nothing is sure, always plan for your risk, then the rational part of your mind will defend this truth in the same way it defends any other belief you hold about the nature of trading. Suppose I will tell that sun rises from the west, immediately you will resist that no, sun rises from the east, because you have seen, you have believed that, you have seen that happening many times, and that is your belief, and your rational part of the mind knows that. You don't need to work on that belief that oh, I have to think about it whether it happens or not. You know that, like that only, if you include this truth in your trading mindset, your mind will defend ki no cheta, don't take the trade unnecessarily at this much huge quantity, don't take hero zero trade, your capital will be wiped away. So you will start thinking in probability. Okay, so this was the gist of this book. I hope you like it. If you liked, then like the video also and subscribe to the channel. All the best, we'll see you in the next video.